Hi everyone, this is a technical analysis on gold. Let's start with a fundamental overview first. Gold recently got a boost from safe haven flows triggered by the Israel and Iran attacks. The market reacted immediately to the first Israel attack, assigning a geopolitical risk premium. This is now fading in the back though, because from a market perspective, as long as the supply of oil is not impaired, the war can go on without any meaningful macro impact. Moreover, there are tentative signs that Iran wants to de escalate, as the Iranian foreign minister said that they would prepare the ground for a return to diplomacy and negotiations if the Israeli aggression stopped. This is leading to a pullback in safe haven flows, and more positive signs of de escalation will likely weigh on gold, as the recent rally would probably get erased. In the bigger picture, though, gold remains in an uptrend as real yields will likely continue to fall amid Fed easing, and just the repricing rate cuts expectations could trigger corrections in the short term. Now, on the daily chart, we can see that eventually gold reached the key 3,438 level amid the Middle East tensions. That's where the sellers stepped in with a defined risk above the level to position for a drop back into this major upward trend line. The buyers, on the other hand, will want to see the price breaking higher to increase the bullish bets into new all-time high. On the 4-hour chart, we can see that with the new high, we now have another minor upward trend line defining the bullish momentum. If we get a pullback into the trend line, we can expect the buyers to lean on it to position for further upside. The sellers, on the other hand, will look for a break lower to increase the bearish bets into the next trend line. On the 1-hour chart, we can see that we have yet another upward trend line here, defining the bullish momentum on this time frame. That's where we can expect the buyers to step in with a defined risk below the trend line to keep pushing into new highs, while the sellers will look for a break lower to increase the bearish bets into new lows. These red lines define the average daily range for today. For the upcoming catalysts, tomorrow we get the US retail sales report, while on Wednesday we have the US jobless claims and the FOMC policy decision.